Good morning, traders. My name is Adrian from BCR, and I'll be bringing you the latest insights and key levels from the market. The instruments we'll be looking at today are the dollar index, spot gold, AUD USD, and USD JPY. Let's dive right in. So, first up, we've got the US dollar index. The US dollar index consolidated before last week's close amid heightened anticipation of upcoming tariffs on China, Mexico, and Canada. The US dollar index moved further away from the 108 level, reaching a weekly high of 108.4. The greenback initially fell following disappointing fourth quarterly GDP data, but rebounded sharply after President Trump reiterated his tariff threats. Market volatility is expected, with tariffs on Canada and Mexico at 25% and China at 10%, set to take effect. Trump also reaffirmed his opposition to BRICS' push for an alternative trade currency, hinting at severe tariff responses. December's PCE inflation data indicated stable pricing pressures, reinforcing expectations of a cautious Fed policy stance. From a technical perspective, DXY maintained four consecutive daily gains, closing above 108. The RSI remains slightly above 50, signaling potential bullish momentum, while MACD indicators reflect cautious sentiment. Resistance levels stand at 108.5 and 109, with further tests at 109.05. Key support lies at 108 and 107.8, with potential break leading to 107.5 and 107.09. That's the 70-day moving average. Any unexpected tariff announcements over the weekend could introduce fresh volatility, influencing the US dollar's trajectory in the coming days. Up next, we've got gold. Gold prices surged to a record high of 28.17 before the weekend, entering a bullish consolidation phase as weak US economic data fueled expectations of a Federal Reserve rate cut in March. Safe haven demand remains strong due to concerns over President Trump's tariff plans and ongoing geopolitical tensions. Additionally, market expectations that protectionist policies could drive inflation further bolster gold's appeal as a hedge against rising price pressures. Despite the bullish sentiment, the Fed's pause in its easing cycle and a mild rebound in US Treasury yields helped the dollar maintain weekly gains, limiting further upside for gold. Currently, prices are consolidating around 2800, with technical indicators showing mixed signals. The 14-day RSI is nearing the overbought zone at 68.75, suggesting caution before establishing fresh long positions. On the downside, key support lies at 27.72 and 27.71, followed by 27.54, and a break below 27.30 could trigger further liquidation. On the upside, sustained strength above 2800 and a breakout past 28.17 could push prices toward 28.50 and 2900. Market movements remain sensitive to tariff developments and geopolitical risks, which could drive further volatility in gold prices. Up next, we've got the Aussie dollar. AUD USD edged higher before the weekend after briefly hitting a two-week low, trading around the 0.6215 mark. Market sentiment remained fragile as President Trump reaffirmed plans for tariffs on Chinese imports, dampening risk appetite and pressuring the Aussie dollar. Australia's NAB Business Climate Index improved to 6 in December, while January's manufacturing PMI rose to 49.8, and services PMI declined to 50.4. In the short term, the focus remains on US trade policies, particularly tariffs on China, along with broader market sentiment. The Aussie dollar outlook remains slightly tilted to the downside, with speculation of an RBA rate cut in February and ongoing economic struggles in China weighing in on the currency. Technically, the Aussie dollar indicators offer mixed signals. The 14-day RSI has dropped below 45, signaling bearish momentum, while the ADX near 20 suggests a weakening downtrend. Key support lies at the 0.6164 mark, with a break below 0.6131 potentially leading to psychological levels of the 0.6 mark. On the upside, resistance is at 0.6275, that's the 40-day moving average, and it's closely followed by the 0.63 mark. A sustained push above 0.6330 would indicate further bullish momentum. But the market sentiment and trade developments, they will be what is key for the driving forces of the Aussie dollar. Lastly, we've got USD JPY. The dollar yen has been highly volatile since last week, with the yen initially gaining as Bank of Japan Governor Kazuo Ueda stated that inflation remains slightly below 2%. However, a rebound in US Treasury yields and renewed risk appetite weakened the yen's safe haven appeal. The pair briefly fell below the 154 mark before rebounding to 155, reflecting the strong link between US protectionism and a more hawkish Federal Reserve, which influences the rate sensitive yen. While the market underestimates the Bank of Japan's rate hike potential by 25 to 30 basis points, further deterioration in US sentiment could support yen strength, particularly in cross pairs. Technically, the dollar yen has broken down below a short term ascending trend channel. The 14-day RSI at 43.2 indicates increasing bearish momentum but remains above the oversold zone. Key support lies at 153.7, with a break below opening further downside towards 153, 152.56, and the psychological 152 level. Resistance at 154.97, with a hard cap is at 156. A sustained break above could trigger short covering towards 156.45, but ultimately, US trade policies and rate expectations will remain key drivers for this pair's movement. That's all, traders. That rounds up today's market analysis. Thanks for tuning in. Don't forget to like, share, and subscribe. Also, if you have any further questions, then don't hesitate to leave a comment below, and I'd be happy to answer. I'm Adrian from BCR, and as always, good luck with your trades.